All right. So take three on this one. A few technical issues this morning. Quite frustrating. Um, 31st of May. What are we at now? 10:20. Okay. So last day of the month. So look, we've got end of the month flows coming through at the moment. Expectation with this is to see some US dollar selling, which we certainly saw through the second part of yesterday. This was added to by a little bit of data that we had overnight as well. So it was the GDP for US, and then obviously we had the pending home sales. Um, GDP came in above expectation just by a tick, but still down from previously. So, you could say the part of it was priced into it. But again, facts still remain that regardless of how much was priced into it, it still actually is a slowdown. And a slowdown with GDP is not what they want at the moment, particularly sort of when, you're balancing recession and you're balancing sort of fighting inflation. So they're the two sort of key factors for them at the moment. In one camp, you got to fight inflation. You can't have that go up again. So you got to hold rates. They're not really talking about raising rates, but hold rates, push off the cuts for longer. And then you've got sort of slowdowns, these kind of indicators like GDP in that. You got sort of the pending home sales was a massive miss to the downside. That was expected. It was revised to 3.6% last month. You had an expectation of a slowdown quite considerably already to negative 1.1%. It came in at negative 7.7%. That is an incredible sort of slowdown, and that's not the kind of sort of time that you sort of think, oh, you know what, let's really put the screws to them and let's really squeeze them. You know what I mean? That's some weak data, and the GDP as well. As I said, 1.6% expected to go 1.2, came in at 1.3, so slightly better had from what it technically would have been priced at. But again, it's a weak sort of reading. So it's not conducive to really sort of, definitely not hiking rates, but not pushing rates, not holding rates for a little bit longer. But so that was the news overnight for the US dollar, and obviously the main theme was this sort of sell down. We did see a bit of a rally coming back into it at the 61%, as you can see here. It did find a little bit of buying support. This is also a little bit of a horizontal over here, which has allowed it to sort of bounce up a little bit through here. Look, it's been a very tough week, and as you can see, sort of very much we've had this sort of pendulum swing of DXY, where it's really just it seems to be just clearing the book because these were the lows going back to, what is this, 20th of May. So 11 days ago, so 2 weeks ago, these are Q lows. You've got the highs of last Friday, Thursday, Friday, and both of these have been swept out. So anybody with their longs and their technical stops down here, bang, they're doing it. Anybody they want to drag into shorts, they sort of drag them in here and then rip it up to the top side, and vice versa up the top over here. If you're sort of short and you've got your stops over here, bang, you're taken out. If you're long and then you're sort of like going out and going to buy it, as soon as we put in that technical higher high, bang, I'm going for it. There were so many people cheering this move on DXY, going, here we go, yada, 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 all this kind of stuff. So, there's a lot of people there that would be just going, what the hell's going on? Because, it has been a very tough week, and you can see it. It's just up, down, up, down. Correlations have been way off. Like, gold hasn't really been sort of doing, well, much of anything, but trading very heavy and pretty much ignoring these massive swings. It's just been trading heavy. That's it. So it's very hard to get a read on things at the moment. So if anybody's sort of finding it a little bit tough, well, it's not just you; it's the whole sort of market. But one interesting sort of thing that I've got marked out here is this green level here. So this is the opening level of the week. So Friday sell down last week. We could see Monday it was a very strong sort of resistance area, which led to that first swing down. And then sort of coming back up through here as well, we did find this as a bit of a resistance, as you can see, came down here, closed that gap on the Wednesday morning, and then bang, once it fired up, it was its breakout point. Look at all the wicks here, but once it went, poof, right up to the top side there. So, as I said, look, it's taken out the lows, it's taken out the highs, book's nice and clear. Now they can sort of just drive it whatever direction they want to go. We've got core PCE tonight. That seems to be the sort of mover. Expectation is the same as basically same as last month. So 0.3% expected previously, 0.3% expected. If we get a cool number, we should see DXY come to the downside here. This could be the driver to get gold up over that sort of 60, 70 breakout levels. It could also get Aussie back up to the sort of higher levels there as well. But of course, I've got to wait for that data to come out. So we did see, interestingly enough, like if you watch what I do, I could be repeating myself with a lot of these things. As I said, this is actually technically the third time that I've sort of recorded this part. But negative divergences. If you watch anything of what I do, you know that they're my sort of bread and butter in terms of sort of finding the bottoms and the tops. This was the one I was trading this with a mate, and we sort of called this as it was happening. Like I didn't think the resulting action would be this big. I didn't read that, but I did say, look, this has got a bit of a negative divergence. At the same time, it's coming into these key levels. This is the weekly body fill. Then you got the weekly previous weekly wick. And this blue line here, I'll just flick onto this quickly, is a very strong. That's the bottom side of your channel from going back to December. So this is all year. So it's a yearly long trend that it was testing off here. That at the same time as having these wicks, so the body fills and the wicks. Well, there's no doubt that you got a couple of people going, "Yep, cool. Let's give it a buy. Let's give it a shot." So yeah, it's very sort of interesting the price action coming along here. Yesterday in my vid, if I did it on this one or I do it on this one here, yeah, you can see this is the action that we sort of thought could potentially be coming through here. This little bit of a triangle sort of coming through here. It still remains with a chance to break to the top side. Certainly not out of it yet. But of course, if we take out these lows down here, and certainly these lows at the bottom here, I mean, that'll be your sort of area. But you're seeing, as I said yesterday, buys are here, buys are pushing up, while sellers are obviously sort of just holding the line here. So really, it's a tussle between, are the buyers going to squeeze it up into this point and overrun the sellers and push out to the top? Or are we going to see that sucked out and just sort of suck in enough liquidity to then sort of pump it down to the bottom side? A break of these lows here, if you go back onto that other chart, we can tell that this is a very sort of crucial area because it's a strong horizontal that we've seen respected time and time again. It was obviously launch pad for that CPI a couple of months ago. We saw it touched up a week or so ago. If we take out these lows over here, this is going to be very big. This is a major break for DXY. As you can see, mate, that's the alarm there, the major break. We get a breakdown here. We get some sort of back test, grab some extra liquidity, and then really drive it down. And then we're looking down, 102.60s to 102.30. So, a couple hundred point to the downside here. This is going to get gold back up towards that 2400. If the correlations can come back into effect, it's going to get Aussie pumping up to 68 cents. There's going to be a big sort of range of things. We might see with that. Well, that'll definitely see Euro probably up around the 110. I don't really trade Euro, but aware of this thing as well. So that's the downside sort of potential move. Upside move is if it comes out the top side here and they see it pump, and we come up to the top over here where we can see that sellers have done it previously. This does still seem to be holding true, this one here. This is a little fake out, which grabbed that last little bit of liquidity before just going bang and smack into the downside. But it has seemed to be respected, and even last night, a crossover with this horizontal, and obviously this falling resistance has resulted in this little push down here. So back onto 1 hour to sort of see what we're doing here. So a little bit of a gap up this morning. There was a time a while ago where the gaps were like 95% of the time dictating the direction for the session. And certainly last week, we had that little, this week, it had that little gap up in the morning, came up into that weekly zone, came down, closed it, and then bang, you can see it just took off. So look, it could potentially, if we get up, I would say back above this sort of 104.80 level, above here, take out these wicks over here, I would say that that's going to see a little bit of a further recovery. If this were to be the case, we get a break above here, then I'd say up to here, and then sort of have to see what happens, maybe a sell down from there. But alternatively, and what I'm probably more leaning towards, is a break to the downside. I think that sort of like, this momentum coming through here isn't just going to completely undo. I think we're going to see it pop up here. I think we're going to see another leg. pushing back down towards these lows over here. If this were to be the case, I mean, this gives a pretty decent little bear flag, which is definitely going to sort of take you out of those zones. And you know, if you're sort of breaking these, if this bear flag plays out, obviously we got the alert down underneath the lows there to sort of confirm it. If that plays out, well, you're going to be chopping through all these, and I think that's going to think you've already wiped the liquidity here. You've sucked in the longs up over here. Whoop, sucked in the longs over here. They're going to be going, oh, look, I'm going to ride this and put my stops down over here. That's going to add to the juice to sort of really get things pumping to the downside. So, you know, I mean, that's how I'm playing it. I'm leaning more to this break to the downside here. I think you've cleared the book. The last move sucked in the longs. Time to squeeze them like they squeezed the shorts up through this move up over here. This sell down quite strong. You got end of month flows where US dollar selling is expected. So I think those things sort of combined sort of leads to a little bit more of a downside move for DXY in the short term at least. All right, gold. Let's flip on to this one because he's sprung back to life. We could see, look, you had so many little levels through here and finally sort of got through. I caught this move up through here, which was very tough work, to be honest. And maybe you've got it on this one's a little bit better to see. Yeah, you can see these zones through here. Well, not so much the zones, but you know, you can see the levels that we were looking at here to take out, Obviously it did. And then, you know, last little bit, it sort of just stuffed around a little bit up over here. So it, same sort of thing, came down here, took out those lows. You know, I mean, this is an area that, excuse me, we've seen sort of, you know, a strong area. This is the bottom of that sell down. And it came right down here yesterday, took out the lows, and then bang, sprung back to life. It was a very hard grind through here. You can see this beautiful negative divergence coming down onto the lows. It's chilling out a little bit now, so it's creating a little zone that we can sort of work with through here. So this, and then sort of bottom side here. This is our little zone to play through here now. So if we sort of get a close above 48, maybe make it at 50, change this a little bit higher because we've wiped out the liquidity of these highs here. So now we know that the people are sort of watching this zone here. We get a close above 49. I think that we could see the next move back up. This is the level that we're looking for a major break for 62. It was the level of that sort of the rally bounce, which was really quite weak, to tell you the truth. Like, I mean, if we look at this sort of move from the highs down here down to the lows, it didn't even get to the 38%. Like, that's shocking. Silver up to the top over here, equivalent of, you know, it completely undid that move. Gold has just been trading like an absolute oaf. Like, it has been so heavy. But the point is, if we can rally off this point here, well, then we're looking at a double bottom. So, you know, let's pull this out here. A little bit more symmetrical and pretty. Bang, whatever. Oof, double bottom. That's what we're looking for here. So a little bit of OCD just to get this thing straight. Good enough. All right, so double bottom. If we break through 62, we drag it down to the bottom here. We go measured move. We put that on top over here. And that gives us our measured move price target. Up around, where to come in? Around the 61%. I mean, still, you know, not right up, but this will take you to 2400 with a measured move. So let's put a price target on that one. Obviously, this is forward thinking, but this is based on the idea that we get a break through this level here. Just think you've got stops over here, you've got stops over here, you've got stops over here, you've got stops over here. This will give you a retest of this area. Well, sorry, not exactly a retest of this area, but, you know, thereabouts. Resistance, because, you know, this is where we were supporting. All these people that got trapped in this, that didn't take their losses, well, they're going to get out. As soon as they get a chance to get out for even, they're going to take it. So that's going to go bang and then back down. So, you know, that's why your price target nice and early before that, $8, whatever. But it's a big move. You know what I mean? That's looking for quite a large move in gold. But a couple of things are happening with gold at the moment. We've got the gold silver ratio, which is bouncing off a multi-year trend line. We're seeing silver actually starting to lag a little bit. So these kind of things mean that sort of like when you're seeing that sort of ratio move like that, we've been seeing, as I said a second ago, silver's been super strong. It's been sort of taking all the money. If you want to trade precious metals, well, silver has been performing drastically better than gold. But now we're seeing that this sort of going, look, I'll flip across to it so you can see. Look at this recovery here. This is the gold silver ratio. Look at how much it has just been coming down. So this means that silver's been the sort of predominant play. Now we're starting to see a little bit of a shift. Nothing in terms of the size of this move so far, but we have been seeing it. If you look through the reactions from yesterday's drop down and then the subsequent recoveries for gold and silver, we've seen gold push to the highs, silver still testing the lows. Admittedly, silver is still way higher than gold is relative to where they sort of drop down from. But the thing is, the flows, if people are trading the metals, they're starting to look at gold a little bit more than they are looking at silver for their returns. And you can see that with that gold silver ratio and that. So if that continues and we get money back into the sort of precious metal market, because it's been quite quiet the last week, as you can see, this massive sell down, people have been getting out of it. If we see a flood back into the metals market and that gold silver ratio pushing up, well, it looks like more people are going, yep, gold is the metal of choice with this little push. So yeah, it's just something to keep an eye on. I'll do another sort of shorter video on this in a little while. But these are the levels that I'm looking for on gold. So I think sort of in the short term, obviously 48, 55, and then 62. They're the sort of levels that I'm sort of looking for here. So we break above here, and we're going here, big major breakout here. They're the kind of levels that I'm looking for. Like it back the other way, OCD. Yes, so yeah, it's something to see to sort of see if this gets some sort of follow through. So I'm just scanning over things and seeing DXY sort of just sideways at the moment. All right, cool. So yes, that's gold. That's a plan of attack for that. I mean, look, if you come back down to the bottom side here, another go under sort of 2320. Say goodnight for that, and we're coming down to 2300s, 2280s, these kind of levels, and we'll approach that where we get there. But at the moment, I'm sort of feeling that we are going to be getting a bit more of a recovery, and we'll sort of see how that plays out. Okay, Aussie sprung back to life as well. Excuse me. So we're seeing a bit of a double bottom, similar sort of thing coming through here. Really big bounce yesterday. I mean, this is like a 50-point bounce or so from the bottom. Yeah, look at that. Almost like a 1% move. I think, excuse me, if I'm selling this, look at where it's sort of rejected from. 61%. Every single time this thing pops up. So if I'm a seller, I'm going, yep, look, this is enough. I'm going to push it back down now. And you can see right here that this was the bottom of a little bit of a range. The way we're holding it through. Let's just make this just a normal zone. Yep. You can see, well, this is a little bit of a zone that we were respecting the other day. You can see buyers here, buyers here. Obviously, it's dipped down under here for a moment, but it sort of shot back up. This was around that CPI time when we had a hot print of CPI, and I, admittedly, I loaded up on some Aussies because I thought, look, here we go, hot CPI. This is what they look for. They say they're waiting for the data. They got the data, and then of course that just happened to be the time that DXY decided to have its squeeze run. And Aussie, bang, got hammered down to the bottom side. So, look, I don't think anything fundamentally has changed. I think sort of had we not had that hot CPI, Aussie would have been down over here. I think the fact that we did have that sort of held us up relatively high, relatively high in terms of this whole move that we have seen the last couple of weeks. So I think sort of that sort of kept us in the game. And now we see some US dollar weakness. Well, people are going to think, okay, if I'm going to sell US dollar again, we rode that little US dollar strength, which is this move down here. You know what I mean? Like people sort of took that move. Now that's undoing. Where do we want to get back into? Well, you want to get back into sort of currencies. One, if the commodities kick back, which is Aussie, risk equities is taking a little bit of a hit, so it's not doing too great for Aussie there. But there is a higher chance of Aussie and the RBA raising rates, even sort of raising rates, actually, I should say, over sort of just holding for longer. So that's really going to sort of play into sort of where people want to put their money. And, if we see US dollar selling off, well, and the RBA is looking to raise, euro, I mean, comparatively, look, Aussie's a weak currency. But the thing is, ECB is looking to cut before the Fed. So, you're not looking for the greatest sort of returns there. That'll obviously be the biggest benefactor of DXY selling off because it makes up the largest part of it. But the point is that Aussie is certainly, well, RBA is looking to potentially raise rates. They're talking about cuts not coming till December 2025. That's another 18 months. I mean, it doesn't really mean much because the RBA realistically are idiots and don't have a clue. But the point is, you've got to go off what their sort of words are. And, like they sort of said, we're not going to raise we're not going to raise rates till 2024, and then they raised it like 12 or 13 times or something next year. Like, you can't, as I said, you can't really sort of take them as from their word, but that's the thing. We're not trading what they're actually saying. We're trading what the speculation is. There's a speculative kind of thing. So what the market thinks they will do, you'll see the price action, and that's what we trade. So if I'm looking short, you're looking, okay, 68 here, you go above here, you're going to be saying, okay, no, I'm done, stops, and we're going to see a push back up to these 70s level over here. So we can see that this has obviously been a bit of a sort of stronger level moving through here as well. And certainly, if we sort of, if we get above those last night's wicks highs, so if we take out those wick highs, we're going to be looking at this level over here. And with this one, as I said, this is why we have this one marked out. This is the 80s. This is I can tell you every single time, this is the RBNZ. When they sort of held their rates with a bit of a hawkish tone, we get proxy move. Bang, shot up here, held for 2 seconds, slam. This was the CPI up into this level. Was it this one? No, this was the CPI just over here. CPI just up into this level, bang, so sold down. So anyway, this is the point here that you need to beat if you're looking to go long. Up above that, again, we're just looking to where we've seen the sellers previously, and that's at 67 up over this level over here. So you can tell they're pretty defined levels. If we can break this one, I'll say actually this here, so 50, put it above, say 50, 55 or so. If we could get above there, this one, boom. If we can get above here, then I'd be looking for 70s, and then I think, how many times can we tap into this level? How much do they really have in supply to sell down and cap it at this level? If you can push through here, if you can come up and hit here again, I would say 1, 2, 3, 4, 5, 6 attempts into this zone. That should be enough. Nothing's a certain, but it should be enough to sort of push it through to the top side. And then we're sort of looking at 67. 67 is going to be that major break. Look at this. This has sold it down and then massively sold it down. And you're seeing like a big sort of double bottoms through this zone through here. So, there's I think sort of a butterfly pattern. I'll have to look into it because I don't use it, but this looks like this would be the sort of thing. It gives you projected moves up to the top side over here. But certainly you're looking at a move up to this. And if we do carry this one through, if we look at this sort of move through here, this last drop down, and we get a break that goes above here, that's undone that. So if you look at where the next levels are, the 127 and the 1618, these are very big levels. Because 161 at 67.35 is a major breakout level. If we drag it all the way back over here, so if we sort of do, if we put something along here, we say, look, they're the highs. We've seen the market really cap it here on the way through, so make this a resistance. Have a look at the start of the year. Here, 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 here. That's a major level. This was after we had that super run into the end of last year, came down here, tried to sort of have a second go, and just bang, hammered it down. You know, you can see the same with this level here at 66.16. Bang, you know, once it goes through, pops through. But if we drag this across over here, if we look at this last move down on Aussie, if we can undo this last drop down here, we've got some pretty key levels. 121 takes us up to the most recent highs, and a pop through there takes us up to major breakout levels. So it's going to be tough. Like you're not going to go through this one straight away, but it's certainly something to look for, or to keep in mind, sorry, if we are trading this to this top side over here, because yeah, that's going to be tough to sort of get through. But they're plausible levels because you're seeing the market has come back in each time. So that's yeah, just sort of forward thinking for this kind of move here. So yep, that's that pull down and then retracement here. So first things first, I think above 66.50, and then 66.70, 67.10, and 67.30 moving forward. All right, cool. Flipping on. Copper has been really taking a bit of a beating, to say the least. We are seeing it sort of come back down to these lower levels over here. It hasn't really done a great deal. This was the plan that if we broke through here, you'd try to sell it into this zone. Overall, structurally, look, it's still bullish. You know what I mean? It's just taking a bit more of an extended breather on this pullback. So what I'd like to sort of do is pull this down here. Excuse me. See if we can find anything that lines these things up. Not a big fan of this bottom one here because obviously that is a little bit sort of tight. We've only got 2 touches. Look, it's pretty heavily oversold. This is on the daily. If we do get a push down here, this bottom level here, this dropping line is your sort of resistance of this channel. We've got a couple of touches on these now. I mean, this one's not really based on anything. It's just matching up with this top one over here. We have seen it sort of hold a little bit more of a pinch to the top side here. I think sort of certainly back above 40, look, 4.89, so call it 4.9. Above 4.9, then we're sort of negated this pullback and we'll go back up to test the top sides over here. So what we can do now is just trade. This will be the zone that we're looking for. This is where we know sellers are going to be hanging out. And you can see it's just pulling back. It's not really a drastic thing so far. Yes, it's coming off the highs, but you got to remember this thing's run like 30% in like 3 months. Where's it going back to Feb? Yeah, 30% in 3 months. If you drag a fib over this, we're barely scratching the top. Maybe not barely scratching the top, but excuse me, we're at the 38%. Put that alarm back there. We're not even at the 38% yet. And you're seeing a big sort of congestion zone down over here. So, you know, you saw a lot of back and forth through this area. You're going to see the same sort of moving back up through here. I don't think copper's done. I think if you wanted to short it, you should have shorted it from the all-time highs. Yes, there may be a little bit of a move down to the bottom side here, but I think we're kind of through this move at the moment. It's pretty heavily oversold. Yes, you've taken out the lows of this move down here. So you could see a little bit of a push up and then another attempt down here. I don't think it's just going to V-shape up from here. But like I had 2 seconds ago, I imagine a push up here and then maybe some little consolidation down here before a push back up over here. This is kind of what I'm more leaning towards now. I would be reluctant to sell this, to short it at these levels. I think sort of, you know, the moment that to short it was over here. Look, this could obviously come all the way back down here. It could be definitely wrong. We got a big major trend line coming up through this area over here. So this is something to sort of keep an eye on. But I think the bulk of this short is done through here. I imagine this to sort of, you know, do something maybe like this. It could, but I think we're going to start to get a little bit of a rounding bottom through this area. I think this is kind of the play that we're going to start to see with copper. moving forward here, and I think we're going to get a move back up to the top side. This will go in line with obviously a little bit of US dollar weakness and Aussie strength as well. We're seeing metals push up a little bit off the lows. Gold's just coming back into 23.46 as we're talking at the moment as well. So that's something to keep an eye on. And finally, China. China, bang, smackdown. And this is what I've been saying. Yes, broken clock right twice a day, whatever. But the point is, this is where we had the price target. These two red lines is where we said, look, we're going to hammer through this. But the main takeaway, as I said, is as we were grinding higher through here, I said, look, when this does break, it's not going to be a dribble down. We're going to see a big candle, and bang, we got that big candle. That was a massive sell down there. So the market has just been squeezing this move back to the top side here. And this is the same sort of thing. We saw it on DXY, we saw it on the bottom of gold. Here are the highs. It comes right up to just take out the highs. Anybody that was short through this area, suck in some longs, and then slam, bang. All those things considered at the same time, and look at the resulting action. And this is the thing. You don't need to reinvent the wheel with this stuff. You just need to sort of see the patterns that many times that you recognize them. This admittedly has just absolutely grinded on and on and on. But obviously once it paid off and it hit that price target, bang, that's a sell down there. And these are the things that I'm starting to pick up and realize more on as well. When I've got these larger, higher sort of, what I call pie in the sky price targets, when they hit, clear the book and reevaluate. Because there's so many times I've been trading Aussie long at the end of last year. And it was like a 300 points. I think it was 200 points in 2 days for the Aussie. And then we just charged. No, that was middle of the year. End of the year, last quarter, we did another couple of 500 points. You get sucked into this euphoric thing of, oh, yep, we're just going up. And then you hit the price targets, reverses, and bang. Same thing with DXY the other week when it sold down to CPI lows. I had the price target down there, bang, hit it. And then we saw the squeeze and the move up subsequently to the other side. So, these are the things. Once you hit the price target, take a step back, reevaluate and say, okay, what is actually happening with it here? Overall, this is my idea. If we zoom right out, head and shoulders. I've been calling this since back over here, October last year. So this is certainly a long play. But we are sort of seeing that this is potentially, it's a bit hard to see through all this sort of stuff that I've got on here. I'll delete all this for 2 seconds just so you can see it. Yep, great, whatever. This here is your shoulder, your head. We've got the neckline. This is your other shoulder. Put it all back there because I don't like losing my drawings. So meaning this was a weekly support. This is super strong. We saw the reaction come up through here, and now we're starting to see, I won't say that we're sort of coming down here because I thought we were coming down here first, and of course, a lot of the market saw that and jammed back up to the top side. But we are seeing yet another rejection from this top area over here, not allowing it through to negate this right shoulder and come back up to these sort of 730s levels. So we're seeing that was the bottom of this support area over here, held. And this is what I'm saying. It doesn't matter what time frame or what instrument you're trading. The stuff is still the same. Support, comes up here, resistance. You break it, you negate it. That's fine. But there's still a good idea that, you're going to see the opposite reaction through these zones. This is why I don't like deleting all the drawings. It does get a bit scrappy with all these arrows, but regardless. So we are seeing a bit of a sell down here. Look, it's overbought. It's coming, it's tipping, it's moving down. We had a big sell down day there. You take out the lows here, we're going to see a bit of a continuation. We can see another strong sort of candle sort of coming down to the bottom side here. There's a lot of levels through this area because it was so grindy and there was such a sort of chop through here. But, 723 and then sort of, this 722, I think is a good level. We could then look for the wicks down over here. This is where I put the downside price target in the short term. I do think eventually we will break to the downside, but as I've seen with the one, it's most of the time, you do get these kind of moves. Most of the time it's like this. It's a fairly stable currency. It goes through a range, it grinds like this for ages, then it'll sort of shoot through to a new level, and then it'll grind, shoot to a new level, grind, and that's just how it sort of trades. But I do think this level up here and that sell down can't just be ignored. I don't think this is just going to undo the next day. So we'll have to sort of see how that plays out. But as I said, US dollar expected to sort of sell off coming into month's end, which is today. So we'll see if this is going to happen across the board with the yuan as well. We're seeing Aussie push up a little bit at the moment. We're seeing gold push up a little bit. Silver, as I said, it's lagging. It's just coming off the bottom. So we can certainly see that. But I'll do a video on the gold silver ratio in a moment just to sort of show a few examples of that as well. All right, that's it from me.